Good day to all of our investors and general listeners. This is the Rudd Commentary. My name is Josh Rudd, and I'll be your host on this presentation today. And with me today is Jack Herr, our capital markets associate. Welcome, Jack.
Thanks, Josh. And I hear we're bringing on a third guest from our office.
Well, you had to let the cat out of the bag. Yes, we will be getting to that in a second. We have an exciting third member of our team that'll be on the podcast today. For our new listeners who may not be familiar with our program today, the Rudd Company is a wealth management firm headquartered in Fort Worth, Texas. We manage investments for clients across the country and specialize in personal investment management, retirement planning, and the setup and management of employer retirement plans. Jack, April is sometimes a stressful time of the year for many investors. That's right, folks. April is tax month. And while this year none of us really know when the tax filing deadline is here in the great state of Texas, we'll try to accomplish two things on the program today. We're going to try to help you lower your stress from February to April. That's the first quarter when a lot of folks start bringing together all their tax information. We're also going to discuss some important things you can do throughout the year to practice tax-savvy financial management. I know that all our listeners just can't wait to discuss taxes. And to help, we have a special guest on the program today, Nick Rice. Welcome, Nick.
Josh, thanks for the introduction. It's great to be here. I know Jack jumped the gun and took the cat out of the bag a little early, but I appreciate the introduction, and it's an honor to be here early.
Well, our listeners may not know Nick Rice yet. Nick is a new member of our team in our retirement and financial planning department. And from what I hear, Nick, you're very eager to offer some value to our investors on our program today.
That's right, Josh. I'm very excited to get some ideas that can help reduce stress for the investor and clients such as ours to be prepared for the upcoming tax year and the next tax year moving forward.
Well, thank you very much, Nick. And, in honor of Nick being here today, I think we're going to rewind to an earlier tradition we had on the podcast. And I just want to share something funny before we get started today. Jack, you ready?
We're going back to the jokes, huh?
Okay.
So I've just got an easy one for you guys in honor of tax time. So why did the CPA cross the road?
I have no idea.
Nick, do you have any ideas?
I'm with Jack. No clue.
Because that's exactly what he did last year. So before we get started today, Jack, and talk about all these exciting tax strategies and ideas, why don't you take us into the trading room and give us a quick market update?
Yeah, well, thanks for bringing the joke back. First of all, that was, they're getting a little better. I'll give you that. But today, just want to do the usual, talk about market performance and then some of the economic trends that we see going into the second quarter this year. So, Josh, as you know, the indexes have done really well so far this year. The S&P 500 and Dow 30 are trading right around all-time highs, which of course is good, but a lot going on under the surface. We've seen some rotation out of those high-tech, stay-at-home stocks that were real popular last year into the more high-quality value stocks that are going to benefit from reopening the economy. When we think of growth tech stocks, we think of the streamers, the software, some of the e-commerce companies that had great subscriber growth over the last year, who had a lot of traffic on their sites. And we've really seen a rotation, again, to those companies that are a backbone of the economy that are really going to benefit, like those industrials, some of the materials companies, and even commodities have done really well. The second major concern, and something that our investors are probably getting used to at this point, is inflation. Josh, we've seen the inflation trade kind of pick up, whether that be through commodities, materials, or even through oil. We've seen oil go up, and that's something that the market's predicting. As 10-year yields rise, that's another trend we continue to see in the market. We'll be able to monitor that in the second quarter, but I expect to see more of the same. Also, that inflation is going to affect the high-yield growth names. So, Josh, the growth rotation and inflation are the two main things this quarter with the market. And like I said, it's been pretty stable with the indexes, the S&P and Dow. Do one of those things stand out to you as far as things that we may expect to continue?
Well, there's this, as you mentioned, there's this massive rotation out of the growth names. And you talked about the streamers. And I just think that those business models are outstanding. There's just a lot of competition in that space, that we've talked about. And now with interest rates going up and you've got alternatives now, possibly higher interest rates, higher dividend yields, folks are rotating into higher quality investments on the industrial side. And I don't mean specifically higher quality from a balance sheet perspective, but I mean for their specific portfolio looking for income, more of a safety net, more defensive names. We've had a really good run in this cycle, and investors realize that. And a lot of the professional money managers, along with individuals, are just looking for different ideas, and they're looking for investment ideas that'll work in the next cycle.
And you mentioned something that'll be a good segue into some of the things I want to talk about in the economy is interest rates. So we've seen, despite the worries about inflation and rising 10-year bond yields, the Fed is determined to keep interest rates low for now. They said they do not expect to raise rates this year. Obviously, we've seen the market kind of playing out. The market seems to think otherwise. That'll be one thing that we'll continue to monitor, and I'll update on the podcast as far as what interest rates are going to do. And I expect it's going to be a little while before we figure that out.
Those are really good points, Jack. And the one thing that I know we've been watching and talking about here in our investment policy discussions is the Fed is holding interest rates low for a much longer time than we had expected. I think it's very interesting when you look at the GDP growth. The growth is enormous right now compared to other recovery periods. It makes me think that there's a little more concern over unemployment and some other factors in the economy that they're watching very closely. That's something that we'll be watching as we move forward. And I think that it really supports a lot of that desire to move into those more secure dividend paying, not just industrial, but quality names.
And especially I mentioned earlier with the reopening as well. People want to see those stocks that maybe have been down, not been doing as well, didn't benefit from the economy closing. People are going more into those stocks. One thing you mentioned, and for those of you that don't know, the two indicators that we typically look at on a week-to-week, month-to-month basis to gauge whether the economy is doing well or improving. We look at the weekly jobless claims and then overall GDP. So on that front, we have weekly jobless claims that are decreasing to their lowest level in more than a year. Granted, they are still high when compared to pre-pandemic levels, but that is a good sign. And then fourth quarter GDP came in pretty strong, around above 4% year over year. And we have had some projections come out for GDP this year, and it's looking like we're expected to grow around 5 or 6% this year. So we'll continue to monitor that, but those are important numbers to the market and to us when we're evaluating the economy and what it's going to do over the next year.
Yes, and I think that a lot of us are really interested in how much of that growth is going to fall off when a lot of the stimulus is discontinued and how those metrics are going to change. That's something that'll definitely be developing.
Absolutely. Then the last thing I had, Josh, is just to give a quick update on the tax deadline. I know you made a joke there and it keeps getting pushed back. From what I can tell, the tax deadline did get pushed back a month to May. So that's just wanted to give our investors an update on that.
And I heard that because of the deep freeze we had here in Texas, I think we're back even a month past that, into June as well. So yeah, it's kind of a moving target, tax filing deadlines these days. We've had kind of the perfect storm, We'll see if anybody knows when to actually file their taxes.
Yeah.
Stay tuned, folks.
And the IRS is busy, so we'll see if that deadline holds.
Well, thanks, Jack. And before we get started today, I just want to remind our listeners that we are not an accounting firm, and we're going to be discussing some topics that are tax related. And of course, we highly recommend that you reach out to a qualified tax professional to discuss any of these topics that we're reviewing today on our program before making any decisions that would affect your individual tax situation. But I wanted to hear from both of you, Nick, specifically you. So why don't you start us off on this program today? Why do you feel that this tax period is just so darn stressful for a lot of investors?
Thank you, Josh. That's a great question. We find here that a lot of the tax stress triggers come from fear of the unknown. What documents should they be getting? How do I get them? When do I get them? Who do I get them from? And how much will I owe or get back in terms of, a tax return. The second would be changes and updates, tax changes, laws that help or benefit them or that may hurt them and their tax return or what they're going to pay on a yearly basis.
Yeah, and Jack and I just talked about it. I mean, we a lot of investors don't even know when they're supposed to file this year.
Yeah, exactly. That's a great point. The third being overpaying or underpaying. Are they overpaying throughout the year or are they underpaying throughout the year where they're going to have a large tax bill come tax time and they're not expecting it?
That's really what, we joked about it earlier with my joke about, why the accountant crossed the road. But at the end of the day, what I hear from a lot of our investors is just frustration that there's not a lot of tax planning that's done at the end of the year with some tax professionals. And that's something that we have the privilege of working with some really high quality tax advisors who do a lot of planning at the end of the year. But, just carrying that same information forward year over year, and then the changes hit us out of left field. And then we have to stroke a large check when we're not expecting it at the worst possible time. Getting a big bill when you're not expecting it or getting a large refund can be a little unsettling.
Absolutely. And then the last being the fear of an audit. It's a very minimal amount of people that will get audited, but we're always concerned about that in the back of our head, doing something wrong that's going to create an audit or we're going to be thrown in jail or something for some tax reason that we didn't know that we were liable for.
As you're talking through those, I'm trying to think about some ways that investors can reduce their stress and really their workload. You talked a lot about fear of the unknown. What can they do during tax time to prepare and limit that disorientation and stress during tax time?
So we kind of put 4 ways here that we can help reduce the stress on clients of ours as well as just the general public. And that'd be get organized. So get your stuff organized early, getting all your documents together, your dependent information, any deductions that you may receive at the end of the year. And that'll help prevent, requests for additional information, can expedite the turnaround time.
So, Jack, I know that you get requests for K-1 forms quite a bit every year, right? And information on those forms. When do those typically come out?
So those typically come out in February and March. And I know those are things that our clients are used to looking for, but at the same time, it can be difficult because they're coming from all different places. They're coming from the investments themselves, not the custodians. So we always have the person to contact and the date ready to go here if you ever need help with that.
Jack, that's a really good point. It actually can be quite confusing, right? Because in a lot of cases, the custodian's the one sending most of the tax forms and paperwork, and then an investor may get a K-1 from an investment directly. And as you said, we can give them the information, give the investors the information, our clients the information, and put them in touch with the individuals that they need to get that date. But really, those K-1s are just notoriously late. And you should always, of course, check with your tax professional if you need information about what to do with those documents. They do come late and they do cause a lot of stress. So what's next, Nick?
Second would be using technology to your advantage. So, that would be like an app to track your mileage. If you're driving for work, your spending for work, things of that nature. And we have a great piece here in our client portal where our clients can upload their tax documents, protected and confidential documents that we're able to view, and helps us plan for them individually and help get an idea of what they can expect around tax time and how we can better plan for them. And using these online tools over the course of the year rather than all at once at tax filing time can help you anticipate what your filing is going to look like ahead of time.
That's a great point. Hadn't technology changed a lot? I can't remember the last time I've seen somebody actually do their taxes with an eraser and a pencil.
I don't think Jack and I are old enough to ever see that.
I know, I definitely haven't.
So, as Josh mentioned prior, we aren't the tax professional or the CPA. So, we highly recommend that you hire a trained professional and someone that you trust as well. They'll help keep you up to date with laws and updates and changes that are going to affect you.
You mean they can actually tell you when the due date is this year?
Yes. I hope they can anyway. So working with that trusted professional, they're also going to work with people like us and your other professionals that you're using to help keep everything put together in one place and get all the information and documents together in a timely fashion and know who to contact. So we recommend you set up an appointment with your trusted tax advisor in either November or December before the end of the year, so that way you can have a general idea of your projected tax and what to expect come filing time. And they'll provide suggestions for reducing your liability or increasing your refund, whether that be through a retirement fund contribution or charitable giving, things of that nature.
Yeah, Nick, I think that's a great point about getting ahead of things and meeting before the end of the year. I know that we will typically send some documents and work with CPAs for the end of the year, get them the information they need. So definitely agree with that.
And also another point that you made me think of, Nick, is that, finding the right financial professional, I believe, is key. How simple or complicated your tax situation is should drive the type of professional that you're looking for and their capabilities and also cost.
Absolutely. Absolutely. So we always recommend starting for the next year now. We're getting to tax filing time. As soon as that happens and you're done, we are in 2021, so your taxes are started already. So if you can start that early, getting those documents, preparing for that, it's going to help you tremendously come tax filing time so that you have everything in order and you're not getting hit with some large tax bill or large refund that you weren't expecting.
Especially for a lot of our business owners that are out there, as all of you are veteran business owners know, that throughout the year, you're keeping track of receipts and keeping documents and statements and always looking for opportunities for deductions. And it's really a more fluid conversation, and just reminding our listeners to think of that as a continuous process is extremely important. And then, as Jack mentioned, to go ahead and schedule that appointment in the fourth quarter to do that tax planning with that critical individual, that tax professional, to make sure that you're maximizing, or in this case, minimizing the taxes that you're going to pay for the year. Nick, those are some excellent points. Is there anything you'd like to add before we move on?
Just a quick story that I have in regards to taxes and being planned for and planning ahead for My wife is in sales and she gets 1099s at the end of the year as a spiff for selling some hardware to businesses. They're provided by the wholesaler themselves rather than from her company. When she gets that money, it's not taxed. So at the end of the year, come tax filing time, she's receiving these 1099s from these outside wholesaling companies. And if we didn't know, or if you weren't aware that they weren't being taxed, you're going to get hit with that large tax bill after you are inserting those 1099s into your taxes when you're filing, and you're not going to be real sure what it is or why that's happening. Something that we always do is when we receive that money, we're saving that, putting that aside, knowing that we're going to have a tax payment when we file. Just so staying up to date on that, being sure that, if you're getting a large check or 1099 from an outside place, that you're keeping some money aside, and if it's not being taxed, that you're going to have to pay taxes on it eventually.
Well, that's great advice, especially for our clients who are already accomplished in their ability to save and invest. And I would tell our listeners out there that if you haven't started yet, I think Nick's advice is very appropriate and timely. So thank you very much. Jack, I want to go ahead and turn our discussion now to some opportunities. Our investors might want to consider some strategies going forward to really work towards tax minimization. Can you describe some of the tools that we use in an attempt to be as tax efficient as possible in our investment management process here at the Rudd Company?
Absolutely, Josh. Yeah, thanks for asking. So the first thing is that we really just need to know the client's full tax status. A lot of those things that we're asking for during annual reviews, those aren't just random questions. They're questions that, when answered, are going to impact the overall investment strategy. So that's something that we need to have a complete profile for the client so that we can invest their money efficiently.
How might the strategy change based on a lot of the information that we get? Say if a client's tax situation is much more punitive than, say, a client who doesn't pay a lot of taxes.
Yeah, right. So one of the things we look at on those tax documents is income for the current client. If a client may be middle-aged, higher income, we're probably going to use a more tax-efficient strategy rather than a client who maybe is well into retirement, isn't making much income anymore. That may not be as important to them.
So it's probably pretty darn important that we also have a good relationship with their accountant.
Yeah, and that's one of the things I know we touched on earlier with Nick. We work with CPAs often. Like you said earlier, we have a lot of good relationships, and we're able to develop custom reports at the end of the year that project income out or give capital gains impact to the account. So those are things that we are tracking often throughout the year, and we are happy to send to the tax professionals that we work with.
Yes, and I just want to make sure our listeners know that those reports are by request and also they're estimates, right?
Yeah. So it's important to remember that they are estimated. Nothing's final until the end of the year. Usually we do send those out by October of every year. So that's a deadline for us that I wanted to point out. So although they are estimations, they're still very beneficial for the CPAs to have. And that's often exactly what they ask for and what they need.
Yeah, I know we've received some really good feedback from our accounting partners when they get those reports. I know it's extremely valuable. So, Jack, let's talk a little bit more about more proactive activities. I see you pretty active in there in the trading room. What are some more of the proactive steps that we can take to help our clients work towards a more efficient portfolio?
So I talked about the tax-free income already. That's something that I think our business does very well. We're constantly out looking for opportunities in that space. Also, capital gains. We're focused on limiting capital gains. So, for example, last year, as you know, Josh, we had a big sell-off. We were able to buy some securities down low. And with a recovery that happens that fast, there's going to be some short-term gains. So if we do get a call from a client to raise cash, I'm always focused on the trading impact and the capital gains impact to the client.
Well, and you made me think of something else, and Nick, I'd like your thoughts on this as well, that it seems to be extremely important that we get those tax returns at review time every year, because I know that I would want to know if they have any loss carry forward from prior years, outside investments, things like that.
Absolutely, Josh. That's a great point. We're consistently reaching out to clients, trying to be sure that they get those documents uploaded to their client portal, staying up to date on there and informing us on any changes or updates that may affect their tax situation. And again, that client portal is protected and confidential.
So what I'm hearing from both you gentlemen is that really getting timely information is just critical, and just keeping that communication open and fluid, not only with the client, but with the tax professional is extremely important.
And it just cannot be stated enough that the tax status of the client really has an impact not only on the investment strategy, but on investment performance. So that's why we're requesting this data and why we need it in a timely fashion.
Jack, you implied earlier about possibly harvesting, losses and gains based on how advantageous it is for the client. If I'm a client, I hear that and I'm thinking, well, golly, I don't want anybody selling an investment to create a loss. How does that work, and how does that affect my account value?
Josh, that's a good question. I think one example you just briefly mentioned it, is, if a client were to send in a tax document to Nick and he noticed that there was a loss carry forward from a prior year from an outside investment, we'd be able to see that and get more aggressive in realizing gains on the client's account during that year. Of course, you want to check with your CPA, make sure that strategy is appropriate for you, but those are things we're frequently doing throughout the year and looking for those opportunities as long as we have that information.
So, Jack, what I'm hearing from you is it's important for us to have updated tax information for the client.
Yeah, it's crucial.
Some other things that I wanted to issue as we close out this segment, we really haven't mentioned one of the most common themes that we see at the end of every year is just really timing cash flows. And what I mean by that is income distributions from IRAs with expenses and deductions in lower tax years for the client in order to minimize taxes. And I think, Jack, one of the best examples that I can give you is when we get that all too common call for an IRA withdrawal in December. Somebody's purchasing a car, maybe they're making a large purchase, especially in this environment, a boat, an RV, something that they don't normally buy. And there's a large IRA distribution. A lot of investors don't think about that. It's not difficult to split that distribution up into 2 payments and simply take one right around Christmas and then one the first week of January. We can usually cut that distribution in half and spread that tax liability over 2 years. Again, you definitely want to check with your accountant and make sure which year or if that's appropriate for you. But I think the point I'm trying to make here is that there's a lot of levers that we can pull if we have good information and if we're working with your team of professionals to try to minimize your tax situation. Well, I just want to put it back out there to you, gentlemen, and see if there's any final thoughts that you have. And let's just give the listeners a quick summary of some of your points. And we'll start with you, Nick.
Absolutely. So, again, the 4 quick ways to reduce your tax stress is 1, getting organized. 2, using technology to your advantage. 3rd, hiring a trained, trusted professional, CPA or accountant. And then the 4th and last thing would be starting for next year now and planning early.
And Jack, I think I can speak for you and your point. It sounds like you said several times, is just getting us the right information when it's available.
Yeah, I'll highlight Nick's point of organization. Of course, that's important for us. And also just getting all the up-to-date information. We need to know that tax status. It is going to impact the overall investment strategy and the investments that we choose. And then like Josh said at the end, there are custom strategies we can use to make an overall positive tax impact on the account.
Well, thank you, Jack. And Nick, thank you for those great ideas on the program today. And also, thanks for being our guest speaker.
Oh, thank you, Josh. It was great to be on with you and Jack, and look forward to doing it again soon.
Well, thank you very much to all of our listeners for taking the time today. As always, if you enjoyed this program, please subscribe to the Rudd Commentary on Apple iTunes, Google Play, or your preferred podcast platform, and never miss an episode. Also, if you know other investors that would enjoy this program, please share the Rudd Commentary podcast through email or on social media. We would also like feedback on our program and ideas for future topics. If you have the time, we enjoy hearing from you. All of us here at the Rudd Company would like to thank you, our investors and clients, for your trust. Thank you for allowing us to be your partner in this long-term financial journey. We take our role very seriously. Thank you very much for listening today. This is the Rudd Commentary. I'm your host, Josh Rudd, and from all of us here at the Rudd Company, invest long and prosper.
This commentary is distributed for informational purposes only and is not intended to constitute legal, tax, accounting, or investment advice. Nothing herein constitutes any offer to sell or solicitation of any offer to buy any security. All investment strategies and investments involve risk of loss, including the possible loss of principal invested, and nothing herein should be construed as a guarantee of any specific outcome or profit. Past performance is not indicative of future results. Any opinions expressed by employees of the Rudd Company are the Rudd Company's opinions and do not reflect the opinions of any affiliates. The opinions expressed by guest speakers are their own and do not necessarily reflect the views of the Rudd Company or any affiliates. Guest appearances on this program does not imply the Rudd Company's endorsement of any entity, person, product, service, or investment. All opinions are current and only as of the date of recording and are subject to change without notice.